following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you're having a great Friday morning. Looking forward to a wet weekend around here. This hurricane's no joke. It's like a buzzsaw, just smashing the East Coast and the South there and coming up this way. I'm in North Carolina, if you don't know that. But going to go down there, check out the waves at least. It doesn't look like it's going to be, an ugly situation by the time it gets up this way. But it is pounding the folks in North Florida and Georgia. That Brunswick area, Jekyll Island, that's if you ever want to see a beautiful place that hadn't really been disturbed yet by human beings, that is a cool area, part of Georgia down there. We're going to try to have on Joey Jong today. I'm trying to get that set up, so if you can bear with us, that might actually pop up at any moment. And I really want to.
Okay. Hi, I'm on. Hey, John.
Hey, Joseph. How are you?
Excellent. How are you?
Good, man. I was hoping we could get you on as early as humanly possible here.
Well, I've been kind of under the radar because the markets, the equity markets, the currency markets, everything has been absolutely no pulse.
Right.
So there's been nothing really to do until these last couple of days, and today with the pound and just going absolutely berserk. I thought, and gold yesterday breaking down, I thought it'd be a great time to get back on the show and start talking some trades again.
Yeah, it's always good to have you on the show, no matter what's going on in the markets. Joey Jung, if you guys don't know this, he's in Hong Kong. He's a really pretty serious player over there, to say the least. Just recently sold a big brokerage outfit over that way, and so we're always honored to have him on. And it's what time is it there right now?
It's just past 8 o'clock.
Okay, at night. Okay.
At night.
All right. Well, appreciate you staying up and being with us this morning. Okay? We got a couple of topics here. I got kind of four main ones I really wanted to go through with you here. The British pound. I've got this one up right now. I read a bunch of. I wasn't really watching this last night. Trying to sleep for a change, Joey. We don't really understand that concept, but I was.
We don't sleep too much.
I was attempting to understand it last night, but when I woke up this morning and started reading the reports, they're talking about fat finger, this, that, blah, blah, blah. But a fat finger, I don't think holds south this.
It's not a fat finger. It's still down 2.5%, which is unbelievable.
It was down 9 at one point.
It was down 9%. Yeah. So,
what do you? Do you think it's just this is the throw up move, and then now you could start kind of from a trading standpoint start looking at nibbling, or do you think this is kind of? I'm looking at the chart. There's just no way, long term to make sense of it. I'm pulling up the 240s. We had a profile appear above price action, even on that time frame, and that's very bearish in nature. So do you think, this is, it's time to start thinking it's on sale? Or what are your thoughts on this? I
think we're gonna at some point retest the 118 level.
Wow.
And we are probably gonna retest that level. And historically, whenever we get these flash crash or whatever, it's actually not entirely flash crash. I think maybe it won't get all the way down to 118, but 120 is certainly very, very possible, I think. I don't think that is that out of the ordinary.
Okay. Okay. Well,
yeah,
just to get,
and especially with the new bars popping up right at 125.5 or so.
yeah.
Or 125 is the unfair low right now. So that's going to hold us big resistance
Right.
in the short term. And,
Right.
Yeah.
So what Joey's saying is kind of what I was saying before. When you have a profile appearing above price action or below, those are indicators in itself. Even though you really can't base a trade on an inflection point there at the time or pick a battle. Those are kind of overhanging bad harbingers of bad news for longs in this case. The short-term numbers, the ultra short-term numbers. Let me just kind of show you our 60 minutes here. There's the 124.87 top of the profile on the 60 minute, and down at the bottom you go to 122.83. So those are big numbers. But again, we've had a recent profile appear even on a 60 minute above price action. If you can see that, folks. And again, these are not good signs that this is over. So technically speaking, we're looking relatively bearish, and I like it when Joey and I are on the same page. Makes me feel better.
It's hard to kind of continue to trade shorts here. Even though I think whenever you have some of these events, it's usually more than fat finger. There's real reason behind it. Obviously, if Europe is going to get tough on Britain on these negotiations that are coming up, then that's really gonna hurt the sterling. And I think already this is basically factoring a lot of it in already. So I don't think the sterling is going to get back to parity to the euro, as a lot of people were talking about. I think it's not going to happen. That's my personal opinion, but I think that if we get down to 120 again, 118, 120, it's a screaming buy at that point.
Okay. So we got about 400 pips.
Yeah, 400 pips. I mean, it's already 280 today, so can't be too far off.
Right. Hey, can we hit the yen real quick? Because that's kind of a little bit more in your wheelhouse than mine. But I've been I've been looking at this. I was hoping we would get that final flush, Joey, below par 100 on this, and it just kind of took off from the long-term inflection points. I was hoping it would flush before it turned around, and I really don't understand. And maybe you can explain this after the break. We got to go in about 5 seconds here. Maybe you can explain, what the long-term landscape might be for this particular currency. So, guys, we'll be right back, and Joey's going to stay with us, and we'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. We're honored to have Joey Jung on with us this morning. Joey, you still there?
Yes.
Great.
Great to be here.
Good. Awesome. Let's hit the end here because,
Sure.
man, I know these inflection points are powerful as heck on the weekly, but we've gotten into this level up here, 103.50, 152, and what's your thoughts here? Is this kind of like a still sell it down, or is this maybe like kind of finally gonna change its tone here, like long term? What do you think?
I think if you we've been at an extremely low volatility state for all the currencies involved.
Okay.
Across the board, right? So the dollar index and all the currencies have been extremely, extremely low volatility. In fact, it's so low that it's basically abnormal. And so in order to get back to a normal state, we're going to get into probably a very high volatility state again in between now and the end of the year, which you have U.S. elections, you have the potential rate hike by the Fed. And so once the rate hikes from the Fed, then there's the biggest bubble that we have right now is the U.S. Bond market, right? It's the Treasury market. Because
right.
Everybody and their mothers are long U.S. Treasuries.
Right.
Because that has been the safest trade that you can ever imagine, and not only you're making money because the bonds are going straight up, and they've been going straight up. The yields have been going straight down. And this is right now the biggest bubble that we have.
No matter how much sense it makes, it is what it is, It
is what it is. And so once the Fed starts raising rates, that basically tilts that, that from a absolutely free trade, no-brainer free trade, to all of a sudden there's risk in that trade.
Nightmare.
Yeah. So I'm not saying that it's going to absolutely crash, but I'm just saying that all of a sudden it introduces risk into that trade, which basically will cause volatility to go up in all the currency, in the dollar, and then in turn in all the currencies across any dollar move. So if you're looking at the yen in particular, we've been in this downtrend since 125 at the middle of 2015, straight down. So if you draw a downtrend line, we've actually finally gotten above that downtrend line for the first week since third quarter of 2015. And this week, today's Friday, so this week we're actually going to close at the highs of the week for the yen, which is very positive. And on the weekly weekly unfair high is 103.51.
Right.
I'm almost. Oh, I shouldn't talk too early. Actually, in 10 minutes, we actually have. In 8 minutes, we actually have the employment numbers coming out. So,
right.
Maybe I shouldn't talk too early.
No, that's going to definitely bust some springs on some of these currencies too. But I'm kind of with you. It's kind of been spring loaded lately. As far as the rates, the dollar, the political scene. And then how these currencies adjust themselves. And then you kind of got this British pound, like you just talked about earlier, which is maybe going to be the leader to kind of just start, getting things to move around finally. So yeah, I mean, I hear you on that classical kind of draw the trend line on the yen. There's two things happening here. That's one of them. And then, we are kind of trying to close above these unfair highs, but on the weekly, which will be like two massive things in your favor here on the yen turnaround.
If we can close around here, 103.60, 104 level, if we can close here by the end of today, then we have a very good chance of this thing, first going to 106 and then going to 110. So we'll see.
Right.
106.60 is kind of the next level. 106.60, 106.80 roughly is the next level. And then beyond that, we're basically, once we close above 103.70, then we're basically in a new trend, right? So the trend has for a whole year, the trend has been straight down, and we had a triangle consolidation for the last 3 months, I'm hoping that this is the resolution of that triangle consolidation.
Yeah, I mean, I was kind of dumbfounded as it was going down all the time, and kind of meeting that resistance and staying in the downtrend. Recently, I was personally a little concerned about even trying to buy these lows down here before it kind of forced some people out of the trade first. Breaking above these weekly unfair highs there's, like you said, there's two things here: that classic trend line situation and then the profiles themselves, and then that will act as support, as we both know.
Absolutely.
So I
mean, those are very powerful things. If you're breaking above the weekly unfair high, and you're breaking above a 1 year downtrend line on the weeklies, and if you're closing on the week near the highs, which is around current levels, then those are all very, very positive things. And like I said, I don't want to shoot myself in the foot because, fingers crossed. Let's hope that this happens. But this is the reason I'm fairly confident that this may happen this time, as opposed to the last few times that it's tried, is because it's across the board move.
Right.
In the previous moves, there's always been just one currency trying to do that, or gold trying to do that, or one currency. And this time, it's across the board. You have the the sterling, you have the yen, you have gold. The euro hasn't participated as much because people are still trying to use that as a safe haven.
God, I hope that thing goes down. God.
Yeah, but once that starts to go down, then we're gonna see acceleration there as well. So
Cool.
This time it's actually across the board, and even the Chinese renminbi, the Chinese yen is actually starting to move as well. So
Okay. Well, listen. Can you hang out? Can you stay on through this next break?
Sure.
Great. Guys, we're going to be right back with Joey. We're going to cover some more bases here. The unemployment report's going to possibly be out right at the end of the break, so get ready.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And we've got the report out, September jobs report. Let's see what's going on. Joey, you still with us?
Yeah, I'm here. Can you tell us what's going on with the report?
Looks like we're up 156,000 on September. Market's rallying just a tad here. I'm showing it in the den. Staying above 2150 on the dailies, Joey. You've probably seen it delayed if you're watching it here.
Yeah.
Gold's rallying just a tad. It's up about $7, $8 an ounce here. Nothing, just kind of a muted reaction, really, at this stage.
Gold is up $7.
Notes bounced just a tad. Yeah, I guess it's time to pack it in and on a Friday just go home. We can always bash Bloomberg if you want to, since there's nothing going on here. That's always something fun to do.
Yeah.
Let's see what's going on with crude here. Not a lot of reaction in the S&Ps. Still headed north a little bit here. Here's crude. Crude's impressing me to no end here. We might have a weekly close above this 50. Got to wait for a weekly close now, though, folks, on crude, and then 50 will be. It's already acted as support today, which has been really wild. We had that close yesterday above 50. There it is. All right, Joey. So S&Ps are rallying, gold's rallying. Notes are up. Go figure. The dollar is just to kind of give you guys what the relative trades are here. The dollar actually hit this unfair high that we've been talking about and has backed off 97.16, guys. It hit it to 97.21. So, 5 or 6 ticks there. We talk always about, where it's time to take some weight off no matter what. That's one of those points, and we're reversing on the dollar a little bit right now. So, Joey, what's the angle here?
Yeah, I think let's just see the dollars come off a little bit because these numbers aren't as strong as the market was expecting.
Right. Which means lower rates, which means market loves lower rates, which means bonds rally.
Yeah, but I think the first reaction is that the dollar has come off a little bit, but if you look at what's going on, the dollar is kind of regaining. The yen went from 103.70 down to 103.30, and now it's back to 103.60 again. So it
looks like the yen wants to possibly do that move and stay above here, right?
Yeah, exactly. It looks like it looks like the dollar is strong. It doesn't want to come down. It looks like if you look at the DXY, it's actually broken out, and it feels like it wants to go higher. So we'll see. Let's see.
Let's check the euro here and the pound. I'm going to pull up the euro, guys, just to kind of, again, we're trying to give you guys a global look here as these things unfold. The euro really, this is pretty cool for me personally. I am short this thing with a hedge. We've got the POC here, 111.43.44, and we're finally starting to migrate below there. I'd love to, man. This is the top of the mountain in a very wide profile. We've talked about this a lot, Joey. And there's that top of the mountain, that POC in a big wide profile. I'd love to see it close below this POC on the weekly on the euro. And the daily, the daily's been a nice trade to kind of leverage against too. The bottom of that profile there, 112.48.49. We've been talking about that for a while, Joey. Let's see what else. Let's take a look at the pound, if that's okay.
Yeah.
All right. So pound against the dollar, again, continuing to sell off. That ultra short term with that 240 overhanging there, that ultra short term 60, we rallied back up into that 124.02, and now we're just coming off again. So if you're catching the show late, Joey and I had talked about this thing possibly getting down into the 120 range before any real decisions could be made about nibbling on the long side. So the consensus between he and I is it's got some downside movement still left in it based on some things we talked about earlier. Man, the yen is just exploding now.
Yeah. So Yeah, it does. Like I said, it doesn't want to. It seems to me like the dollar wants to actually continue to go.
Okay, let's go back to the dollar screen here. Remember, folks, that's a big number up there. We talked about it, 97.15.16. But when you get into these inflection points, and Joey, you may want to elaborate on this. You want to see these markets just get away from these things, and when we kind of get there and start crowding it and not really wanting to back off, that's a sign in itself.
Yeah, it's let's see, okay, so the yen is right back, and the euro is right back at the low. The yen is right back at the dollar yen's right back at. So the dollar's right back above the level in which before the report,
okay.
Which is very positive because you're in a situation where the numbers are coming in a little bit weaker, and yet the dollar is able to continue to rally, and it's rallying across the board in all the currencies, including the Swiss, including British pound. It's happening across the board, and I think at some point we're gonna get the euro really breaking down because it's going to follow the sterling. It's going to follow the sterling, and it's finally kind of starting to weaken here.
Right.
And if you look, it was time. Almost completely flatlined. There was a period where I just gave up, and I said, I'm not even going to watch these things anymore because.
That's why I stopped looking at it too. I just put the hedge on and just kind of didn't look at it. This has been a long time coming, and you're not telling me anything I don't want to hear. This is okay for me to hear. On the 10 years, kind of reversed here, and market was kind of depending on that. Now let's look at the S&Ps because this is a big number here. On our dailies, we've got this 2149, 2150. Now, do we kind of look at these higher rates? Market hates it. Let's kind of start looking at shorting this, or what are we, what are we looking at this as support? Can you stay on? We got another break. Can you stay on? Okay,
it's
great.
Gonna keep going. The 10 years are breaking down big time.
Okay, all right. We'll be right back, folks, and we've got Joey Jong with us from Hong Kong.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. We've got, I hope we've still got Joseph Jung on with us.
I'm still here.
Well, man, on the break we were chatting, and you were saying that you thought it was too early for a woman to be president. What did you mean by that? I'm just kidding. Let's
that
see.
wasn't Ethan talking about. That was you down south talking about that. No.
You know what's wild is you could just say, "I never said that." And I was listening to Pence the other night. It's not even it's not even plausible deniability. He just flat out denies. He's like, "Oh, that didn't happen. That was I was cracking up the whole time." But man, how do you argue with somebody who just basically is denying? I mean, like, that never happened. It was wild. Okay,
Yeah,
so
it's crazy stuff.
So what do you think about gold here? Here's the 240s, and I know this is a volatile instrument right now. Do we we've kind of run up, and do we look at 1260 and 3 and some change? Do we look at that as support to go higher, or do we? Because I mean, this is a new 240, first appearance in a while, actually, on the short term. What do you try to nibble down here, or what? What are your thoughts?
I think we need to actually close. And this is a nice bounce, and trying to get back to. But there's the 200-day is at 1263.
Okay.
And so we broke down below that, and it's basically attempting to get back up above there again. So unless we're gonna close clearly above that, I wouldn't be too worried. And obviously, we need today is a very important day because we have the employment numbers coming out, and then we're really sitting right on the inflection point of the euro and on the yen as well, right? And so even though the sterling broke down for its own reasons, we really need the euro and the yen to actually confirm that the dollar trend is indeed a dollar trend and it's not just the British pound, taking a dump here. So
right. No, I hear you. So, kind of a wait and see, I guess, in your book, just for some more confirmations as far as gold goes. Is that fair to say? I think gold may be putting in my personal opinion is it may be putting in a little bit of a contra trade possibility bounce here.
Do you see that in the charts or no? Like, I'm
showing it right. Yeah, okay, I'm showing it right now. I mean, this is definitely, by the way, folks, there are no indications on the long term that gold is, it's time to scoop it up. I mean, we talked about this 1296 number, Joey, that I'm showing. You're probably seeing a little delayed here on your screen, but that was, hey, it's it was okay for me to just sit on the sidelines until there was a reason to possibly even nibble, even on a short-term basis. But again, you don't have any long-term change of tone reasons after this breakdown below 1296, which was that weekly unfair low. But you do have trading opportunities on different time frames sometimes. And I personally feel like we might be putting in a little short-term bottom here. All right, so
Okay.
again, yeah, things are, the S&Ps are just kind of swimming around here unchanged. So
Yeah, the S&Ps don't really know what to do.
yeah, and the market will be open in 45 minutes. So a lot of those
I
stocks
mean,
will open.
there's only so much Amazon, Apple, Facebook that you can buy, right? I mean, how much more can you buy of those things? And so the market, the index is being held up by the great horsemen, right? So all these leaders are holding up the market. The rest of the market isn't actually doing that great. So it's all a matter of how much longer can they survive. And
Yeah, I was showing yesterday. I've got the scanner up, Joey, along the lines of what you just said. There's been quite a few breakdowns in a lot of the internals.
absolutely, the internals are horribly, horrible right now. And if you look at the broader the NYSE index or the Russell 2000, you look at a lot of these, and they're not looking healthy. So.
Yeah, no, there's quite a few stocks that are kind of starting to roll over, and what Joey's saying is so true. A lot of the index or the Nasdaq and the S&Ps are comprised of, a small amount of stocks that weight it heavily, like the Apples of the world, like he stated before, the Netflixes, the Facebooks, Amazon.
Amazon's. So,
Yeah.
and people are up to their necks in that. Everybody owns a lot of it. So I don't necessarily recommend selling those at this point, but you can't necessarily push those much higher because everybody is already very, very long of those.
Right. Look, can we switch?
There's no reason to buy the other stuff. So.
Right.
Yeah.
Right. So there's a widening disconnect in the leaders and the rest of the pack to sum up that conversation. Can we talk China for a little bit? Because I've been thinking at some point, this Shanghai that I'm showing on the screen right now, we were just kind of compressing into this really low volatility situation. And when we kind of busted above 3069, Joey, I really thought that we were going to start moving north again, but we've kind of sailed south a little bit here, just in a low volatility range. We got about 2 minutes left before the break. What's your general thoughts on China right now?
My general thoughts on China is that there's a massive credit bubble in China. If you look at you look at it on any measurement, the banks have basically the government has basically told the banks to lend out as much money as possible, and the real estate market is up 100% this year in most major cities, or 90%. So having real estate prices go up 90% while the economy is actually going down tells me one thing, that there's a massive bubble that is artificially created. So that's not a healthy state. The stock market has barely moved off of the bottom and has basically zero participation in the stock market at the moment.
That's interesting because it seems like nobody's really watching that or even concerned about it. As far as the U.S. markets go, because if that's the case and then that starts unraveling, you would think that would be the possibility that would be spooking the U.S. markets, and I guess it's just got to happen. It's got to start happening in the index before anybody in the U.S. starts caring, I guess. Is that fair to say?
Yeah, I don't think the index. Don't look at the stock market index because you should probably be more concerned about the
credit situation.
Yeah, the credit situation, absolutely.
Okay. Well, Joey, thanks for coming on today, man. It was a joy.
Okay, thank you. Okay.
All right, buddy. We'll be back in a minute, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special 1-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 1-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long, short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Okay, guys, if you're joining us late, we've had Joey Jong on with us this morning, just kind of surfing around a lot of different instruments that may be affected by this jobs report. Everything's kind of, as far as the S&Ps and the notes, they've just kind of settled into a bleh after initial kind of volatility here. Notes really, this is not, this is kind of a continuation situation here, looking at it, stepping back. I mean, the markets may not like that. Joyce alluded to some things in the area of a lot of the, there's a disconnect that has been developing recently in the leaders of the pack, of the S&Ps and the NASDAQ and the rest of the pack. So that eventually, when that rubber band gets stretched out, it eventually comes back to some kind of mean reversion situation. So looking at the notes and the S&Ps, I'm a little more bearish on the S&Ps based on the notes kind of continuing to head south here. At some point, they're going to look to that those lofty rate numbers and say, oh my God, we cannot deal with a 1/4 point rate hike at all. That's amazing that the market is at that's taking that as a very tenuous situation. Something else that was really wild. I mean, taking a look at. Taking a look at. Let me get the right contract up here. Taking a look at December corn. You know, I can't believe this. I mean, a lot of people around here start, getting corn out of the field, 2 months ago. There's still corn out in the field here, which is really wild in North Carolina. I haven't had a chance to get it in. This is not the breadbasket of the United States by any means. It's just a gnat on the corn harvest situation relative to the Midwest. But looking at December corn, 330 seems to be a little bit of a floor there. You got an up top number of 356, and right now we're just kind of smack dab in the middle. And it's kind of a no trade right now. Had an email about that. Taking a look at November beans just to hit the grains, because we've already decided that everything else is kind of stuck in the mud. So having a weekly close again below this 964 area is kind of reversed back down below it. I'm still looking at that, play defense on the short side, and eventually get back down into 944.45 and even lower on the new crop beans. That's the situation there. Let's go back to the currencies really quick. We got about a minute left. And here we go. So British pound. Come on, eSignal. Did I pay my subscription? Well, we're kind of locked up there. Okay, we're not getting quotes on our currencies right now. When those things, you guys, those things trade, that takes a massive amount of resources, I'm sure, on any data provider's side, and especially on our side, doing the scanner calculations. So the currencies sometimes are too much to handle. Let's just see if we can get them up. Nothing. All right, guys. Taking a look at gold just to wrap up. 1263 is a big number on the 240s here. We broke above. I actually like this to kind of edge higher now on a contra trade against that long-term trend down. And again, you had a decent chance to put a bid in around these inflection points when this appeared down here, but I actually like this to move a little bit higher. So that's what I'm kind of looking at on gold. Not a long-term trade, just a trading opportunity. Guys, you've been great. Thank you again, Joy, for coming on. Stay tuned for Larry. You will thoroughly enjoy it.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.